Welcome everyone who's tuned in. We'll have some others join as well. My name is Ross Pally, General Manager at Venture Lane. We are a hub and support system for early stage technology companies in Boston. And more recently, with our programming being 100% virtual, early stage technology companies everywhere. Today we have Lyman, partner at Underscore VC. And topic for today is, I think that, and Lily, curious to hear your input. I think for us at Venture Lane, a lot of the companies that we work with, maybe the first 30 days or so of things escalating, there was a lot of sort of defensive posturing and preparation, dealing with cost management and customer retention and things like this, bridge funding maybe. And then maybe in the last 2 weeks or so, 2 to 4 weeks, a little bit of a shift towards, okay, how do we get back to business? How do we start to reignite some of the growth rates that we had prior to things escalating? So we're trying to provide some content that's a little more sort of offense oriented and helping founders get back to business. So that'll sort of be the topic for today. We'll turn it over to Lily in just a moment for an introduction. Final rules of the road. If you have questions at any point, there's a Q&A button down at the bottom of your screen. Feel free to hit that button, enter any questions that you have for Lily, and we'll try to get those things answered. And bear in mind that topic for today is how investors can be value additive in times like these and help support growth and kind of get things going again. So any questions you have around that topic, feel free to pop them into the Q&A. We have a poll going. We'd love to get your answers there. And with that, we will turn it over to Lily to quickly hear about her role at Underscore, maybe a bit about Underscore for those who don't know, and quickly kind of professional background before Underscore.
Sure, great. Well, thanks so much for having me, and thanks to everyone who's joined. I think connecting these times is one of the most important things we can do, and finding new ways to do it is particularly helpful. So thanks for pulling this together and for everyone who's joined. I'm Lily Lyman. I'm a partner at Underscore VC. We are an early stage venture firm based here in Boston. We focus primarily on seed and Series A investing, focused on B2B software, and we are Boston biased in our investing. We're very excited about what's going on here and want to be part of building that broader ecosystem. We bring what we call a community-driven model to venture investing. So what that really means is, how can we help surround founders with the right people at the right stage with the right background to help them in their journey? And whether that's a critical hire or a potential advisor or even just sort of a peer who's going through something similar. But we know that we're big believers in it takes a village, and I think it really does take a community to build the next iconic company in Boston. So that's part of what we are trying to do. My background is as an operator and as a founder, and then I jumped over to the investing side several years ago. Prior to Underscore, was most recently at Facebook out on the West Coast. Was out there for several years, got my MBA out there. I was part of the growth organization at Facebook in a product strategy role, focused on how do we get the next billion people on the platform and what are the new products and things we need to do to do that. I've also been a founder in the ag tech consumer space, totally different world, but have worn that hat as well in a couple other operating roles. At Underscore, I spent a lot of my time on the investment team at the top of the stack, at the application layer, a bit on the data layer as well. But as an investment team, we cover sort of all different parts of the B2B tech stack. So that's a bit about us. We are about 10 people now, or going a little bit, but very excited to have backed some great companies here in Boston. A couple folks on the list I recognize. So thanks again for having me.
Awesome. Very happy to have you. So just to set the stage a little bit, Lily, for founders that you've been working with or spoken with in the last 60 days or so, are they sort of kind of seeing a uniform impact on growth? So sort of top of funnel sales activity trickling all the way down to revenue, or has it really varied from your perspective on sort of like a case by case, company by company basis?
Yeah, I'd say there's definitely some variation. I think, as we were looking across our portfolio, we thought about sort of three different buckets of, who's going to be really challenged in this and is going to face a lot of headwinds, who can kind of buckle down and weather it out, and then who might get some benefits or some additional opportunities where the tailwinds in this environment. So I've seen sort of all three of those categories, and I think the way that companies are responding based on that, it basically sort of depends on where you sit. I do think in general there's an expectation of slowdown in revenue and bookings and new business, and part of that is we are in this phase of customers across the board, across different markets they have been in this, okay, let me stop and figure out what's going on, sort of a stop and pause moment, but they're starting to pick their heads back up and say, okay, how do I operate in this? So that's what a lot of customers are experiencing. And so as our portfolio companies are trying to service those customers, there has been that challenge. I think Q1 was less than what people expected, but it actually wasn't as bad as a lot of people expected. I do think people expect Q2 to be probably worse. And then Q3, Q4 is unknown. But we, as you mentioned, I think the first couple of weeks of all of this was, okay, let's look at our cash burn. Let's look at our financial plan and what scenario planning should we do. So we did encourage all the portfolio companies to do worst case scenario planning. So expect no new revenue for the rest of the year. Expect no new financing. How do you make your cash last as long as possible? Then there's sort of a mid case scenario. Okay, 50% of bookings, 30 to 50% of bookings. What would that burn rate look like? And then the upside scenario that this doesn't last as long, how can you trigger it and accelerate it? So as you said, sort of the cash management piece was phase one. And now we are in this phase two of, okay, where should people be spending their time? What effort should they be putting in? And what we see a lot of people focus on, and we can talk a lot more about it, but I think a big theme that we're seeing is, how do you treat your current customers like prospects? Because if you're thinking about revenue and where it's going to come from this year, it is going to be much more likely that you can, you first want to make sure you keep your existing revenue and prevent churn. And then two, expansion revenue with your current customers is probably going to be easier than getting brand new customers. And so a lot of the companies that I see doing things really well are saying, hey, how do I quickly pivot to be very, very deeply customer oriented across my organization and figure out how do I hug my customer? Jeff Burnett, one of our core community members, said this yesterday. And I think that's right. How do you figure out how to hug your customer right now and deliver value for them? And we can talk more about what that means, but that's a big theme that we see people figuring out. How do I do that? How do I get their attention? How can I deliver value for them so I can keep the revenue that they're currently paying me and potentially try to expand that as we look out across the year?
Sure. And I do want to talk a little bit about core community. I'm sure you guys are hitting peak rates of activating the folks in that community. But before we do, digging a little bit into the concept of customer retention, increasing the lifetime value of that customer. What are some of the strategies that you've seen sort of be effective for the founders or for the startups that you're supporting? Is it just kind of like increasing service level overall and responsiveness? Is it prioritizing new features that are sort of additive to the current features? Is it renegotiating terms of the current contracts in terms of pricing and duration? What sorts of categories are you seeing be most effective? And it may be all.
Yeah, I think you touched on a lot of them. I mean, I think the first step is figuring out how do you position yourself to be a true partner to your customer in this time. And that starts with listening, learning, empathizing, understanding, and trying to translate that into how can I add value to you and prove to you that I'm really valuable. So the step one is kind of like make sure you're super connected, and obviously you can't go sit next to them, but do sort of have weekly stand-ups or whatever it might be, but sort of show like, hey, we're here to be your partner. What problems are you having? I understand your problems. Let me figure out how to go solve them. Then in terms of tactically, how do you do that? We are seeing folks, do different things. Some people are playing with pricing strategies. So can you extend free trials longer potentially, or make slightly more favorable, thinking about trade-off of long-term value versus short-term cash is something that we're seeing founders think through. I think you want to be careful on that, and some founders get nervous. Well, if I give them a discount now, can I ever get them back up in the future? How do I do that? One tactical piece of advice that we heard yesterday from Raj Agarwal, who's the original founder of Localytics and now a company called Demand Stage, had good advice, which was you can give some pricing discounts if you think that will help keep them, but name it that and put it time bound. So there's a COVID-19 3-month extension of your trial or extension of this price offering, so that you do have a reason and a clear expectation set of why you're going to go back to a different price, and you can extend it after 3 months, but at least it's not forever, and it's got a clear sort of label and name to it. So I thought that was a very tactical, good piece of advice. I think a macro theme is how do you reduce friction for customers, both current and new? And so is that a price friction? Is that an onboarding and installation friction, getting something integrated? So is there a way to adjust the product or make the wedge easier? But anything that creates friction in these times is going to be challenging, both for existing customers and new customers. So what can you do to really understand what is causing people pain and friction, and what can you do to alleviate that? Those are some of the practical or sort of tactical things that people can engage in.
I've definitely heard a good amount out there about, excuse me, kind of like reducing that onboarding friction, and how do you simplify that as much as possible and get everyone on your product, on your platform, usage rates higher. That's definitely been a theme. So returning to core community then, for anyone who's tuned in that isn't quite as familiar with Underscore and the core community, would you maybe give us just a quick primer? What is core community? What is the purpose of that community? And then in the last 30, 60 days, whatever the time period might be, what are some of the ways in which Underscore is sort of like deploying members of that community and trying to support founders with that amazing resource?
Yeah, sure. So our core community is essentially a group of operators, entrepreneurs, executives from largely across Boston, but even beyond, who we have gathered into this community, and we've sort of curated through, I'd say, domain. So is it commerce or AI or insurtech? Stage, are they really early stage folks? Are they growth stage folks? Are they really experienced later stage? And by function. So it's marketing leader, VP of engineering, whatever it might be from a functional basis. And when we first started building out the core, we thought it'd be a couple dozen people, but it's turned into hundreds of people, close to 1,000, I think. And essentially what this group of people do is we see ourselves kind of as conveners. And what we aim to do is engage them alongside founders in the Boston community and alongside of our portfolio companies. And there's a couple different ways that they do that. We have a specific program, what we call our core partner program, where essentially we engage a small group of these experts around each portfolio company after we make an investment. And they serve basically almost like a council of advisors and have structured it such that they have some skin in the game in order to be excited to be helpful on that. But also what we found is that a lot more of it is just about connecting. And if you bring people to the right room, virtual room these days, they want to learn from each other. They want to learn from their peers. There's just so much sort of serendipitous connection that can happen there. And so folks have met their co-founders through our core community, or next critical hire. Or for us, we've backed founders that have, were operating in a company and then decided to start a new company. So part of it's also just sort of how can we help be a convener and facilitator of all these great operators and entrepreneurs and connect them and see what comes out of that. So that is our core community. There's more information on our website, or folks interested in getting involved or joining some of these events. Over the last couple months, we've been thinking, I guess it's months now. I don't know what week we're on, 7, 8?
It's months.
Losing track. We've been kind of experimenting of how do we take so much of what was great interaction in person and move it online. And huge props to our community leader, Jenny Goodman, who's been experimenting with this. But we've been able to do a lot of great virtual events through different types of engagement. So we've done small groups. We did a customer success leader group, and it was really small and intimate and very tactical. Yesterday, we brought some members of our core community who had all built companies in 2008 and had lived through that. And what did they learn? And what are some lessons that are applicable from that crisis to this crisis? As I said, we had Jeff Barnett lead a session on what does customer success look like in 2020 and how should we think about that. And that was a much broader open thing. We've done some things with just our portfolio companies, with folks like John Devajian, who is the CRO at Salsify for a long time, think about how do you move sales through a pipeline during this time? What's going to work? What's not? So we're experimenting with all different types of engagement. And if people are interested in getting involved, let me know. But so part of it's been, again, the community gathering. And then we've also engaged a lot of core folks specifically with portfolios to tackle a particular issue. And so we've done a lot of that matching of, okay, well, these guys really need to figure out how to move, brands and retailers right now who are in total, everybody's in crisis, but these guys are really in trouble. If that's your target customer, what should you be doing right now? We have several commerce tech companies in our portfolio. So matching people to help think through how to tackle some of those challenges in a tactical way. We're doing a lot of that sort of matchmaking across experts and needs. So that's some of the stuff that we're doing. We also still are investing. So we're actively investing, and a lot of our core community members help us meet new founders or people who are early stage in their journey or great companies that we should be paying attention to. So majority of our introductions to great founders come to this community, and that's very much still happening. And they're helping us engage and vet different investment opportunities. We do core workshops where we get these experts around the founders. So on the new investment side, we're still very active there, and the community is playing a big role there.
Got it. So it sounds like a mix of large format to help with sort of learning, sharing, and maybe a bit of networking there as well, because that can be so difficult in the current climate, down to smaller format, more tactical. What are 1, 2, or 3 things that I can do today or tomorrow to start to affect change, all the way down to sort of the one-to-one matching for some of the founders in the portfolio.
Yep, that was a better summary than what I
said. We've done quite a few webinars at this point. So we'll dig into the poll in just a moment, and it looks like we actually have a good sort of primer question from the audience before we do. So question coming in: how much pressure should or can a founder put on investors to help with intros to other investors, customers, etc.? So maybe sort of broad thoughts here, and then we're actually going to get a little more granular, kind of category by category with the poll.
Okay. I think it's a very fair thing to ask of your investors. I think this is a time where you have very aligned incentives with your investors in terms of, okay, how are we going to help make this company be successful, particularly in this difficult time? And I do find that I think a good news is founders probably have more of their investors' time focused on them right now, than maybe they normally would, because everyone's like, okay, we got to really help our companies get through this. And so it's a time to band together. You have shared incentives to be successful. They want you to be successful. So I think it's a very fair ask. I think what you can do is make sure you have an alignment of like, okay, what do we need to prioritize to be successful? Is it new customers? Is it we've got to find some financing? How are we going to do that to extend our cash runway? Is it let's buckle down and work on product right now to help us get a competitive edge coming out of this? So make sure you are listening and openly discussing and sort of are aligned on where are we going as a company and what are our priorities. And then once you get that alignment, it's very fair to say, okay, can you help me do that by these 3 things? And again, I would prioritize those asks just to make sure that you're getting the most out of your investors and that you have sort of prioritized attention. But I would start with, okay, what's most important right now? So that, because everybody's busy and has, there's lots of ways that they could help, but figure out what's going to really move the needle on the business to get through this difficult time. And then let's work as a team to go out and get it.
Got it. Okay. So using that framework that you explained, we'll dig into the poll quickly. So we have 5 strategies here. So things that an investor can do to help reignite growth for a portfolio company. We'll go through the numbers a bit, but as we go through each category, for you, Lily, curious to hear, in your framework, let's assume that this category, the founder has decided is priority number 1, or one of the top priorities. What would be your advice for a founder approaching a current investor to help put that strategy into effect. So starting with the first one, new customer introductions, not the biggest category of the 5 that we hear in terms of, most clicks, but we do have a handful of people saying, yep, it sounds, my investors have helped me with some new customer introductions the last 60 days, or I, as an investor, have made some of those introductions. So again, your advice, if it is a top priority, how does the founder go about requesting that of their investor?
Yeah, I think a premise is, how can you make it as clear and straightforward to empower the investor to make that introduction? So very tactically, is it, if someone says, Lily, can you make these, I see you're connected on LinkedIn to these 3 people. Can you connect me? Here is a blurb, or here is the written email I'd love you to make, which says, can I connect you with this founder? This is what they do. This is why I think it's relevant for you. Are you open to an introduction? Make it very, do the work for the investors, essentially, because then you make sure your messaging is on point and your ask is very clear, and you kind of get to control that narrative, and it just makes it easy for the investor to know exactly what you're looking for, why, and how they can help. So I think, to the extent that you can do some of that back work and make it, facilitate it, make it easy, is very helpful. And then again, I would prioritize. So it's not 30 intros to these customers that are in all these different segments and things like that, but it's like, these 3 are my target. If I could land these guys, they would be, my target logos that I want to showcase. This is, these are why this is my priority. And so you have alignment and focus there, because I think a spray and pray in this time is hard. It's hard to get people's attention right now, particularly customers for new sales. And so if you're going to leverage an investor's contact for it, make sure it's sort of the right type of intro that you want, and make sure it's pointed versus super vague.
Good advice. Very good advice. So moving on to the second category, this one's a little broader, so I think that's why we probably got some more responses to it, but general advice on marketing and sales strategies. So again, big bucket there. But if you are a founder approaching your investor, needing a little bit of subject matter expertise and needing a sounding board for these types of strategies, how might a founder best go about asking for that advice? And are there good examples for founders that you've been working with in the last 60 days? Hey, this person really did a fantastic job, and here's why.
Yeah. Maybe I'll start with that, because I have a couple examples of things that I think people have done well. I think one of the good things that's coming out of this is because, marketing and sales is harder right now, and budgets are getting crushed or slashed for marketing in particular. So you may not have a huge, cozy paid marketing budget. It's forcing people to get really creative and really scrappy. And some of the best founders I've seen, they've been able to pivot on that really quickly and do some creative things in order to drive some of that organic growth. I think marketing is particularly hard because a lot of channels have been shut down. So people are used to marketing at events, can't do that. And so inboxes are getting flooded with messages that say C19, and people don't always want to open 30 of those. So it's forcing creativity. So again, it goes back to that premise of how are you going to add value quickly? I've seen some folks do that on the data side, which is, hey, I've got some really interesting data that might be relevant to my customers. So let me package it and just give it to them. But that's sort of a type of content, for example. So I think, I'm seeing a lot of people focus on things like content marketing, or we have one company called Qual that's doing some really interesting things around community-driven marketing. So how can you get a little creative given that paid marketing isn't as obvious? Another great example in our portfolio is a company called PopCart, which is an e-commerce platform to help people find sort of the best prices and the best products across retailers, which is actually, from a product perspective, pretty unique and hard to do. But what they quickly realized is that their technology was really helpful in finding people find supplies that they couldn't find. So our paper towels, toilet paper, Clorox stuff. And so they quickly spun up another product, a website that basically became what they call the supply finder, which I selfishly and personally use all the time. But it was a way that solves their customers' needs based on the needs now. And then it becomes a lead gen for the rest of their product. And they've gotten some great PR traction, some press hits and stuff like that. But it was incredibly quick, scrappy, and it was all about what do people need right now? How can I help solve their problem? And I think that you got to start with that empathy and make sure you're really listening, and then ground your marketing and sales efforts around that. Um, I think another piece to that is understanding people's both personal and business problems, and how do you weave that? What role are you playing in solving some of those problems or building that empathy there? So tactically, that's some of the things that I'm seeing people do, which is, get scrappy and creative and make it very need oriented and problem solving oriented, because I think there's not going to be a lot of room for the nice to haves right now from a customer's perspective, from a sales perspective. Sorry, can't scream toddler. Speaking of working from home. So, making sure that you're listening and learning on that perspective. In terms of how to ask your investors for that advice, I'm not sure. I think, if you want to bounce ideas off of them, or more importantly for us, like I won't pretend to be an expert on X, Y, Z, but can I connect you to somebody who can? So for example, as I said, we did a open workshop with a great sales leader who helped people think through this. And then similarly, we've seen groups on customer success teams gather together to say, hey, what are you guys doing? What's working? And so I would encourage you, if you're asking investors, do you know someone I could talk to who could help me think through X? I'm trying to explore this other type of content marketing and I've never done it before. Do you know somebody who has? Or similarly, like I'm really struggling with my sales pipeline moving. I'm thinking about adjusting my pricing. Do you know somebody who's done that before? So I would ask for access to the expertise, and it doesn't have to be a 4-hour commitment. It could be a 30-minute call that might really help you.
Yeah, and these things might not necessarily have to wait until the next board meeting or the next on the calendar date is, given the current times, and really probably maybe any time it warrants, a quick email or a quick phone call.
Totally. And if it's about getting a quick reaction to something, that's also easy. I am thinking about doing this or this. Have you seen these before? What do you think? Yeah, make it concrete and tangible.
Cool. Okay. A lot of crafting the ask is is coming to be the through line here. So category number 3, candidate introductions for hiring.
Yeah.
Yeah. Kind of similar to new customer introductions. Handful of people said yes to this one. Our investors have helped with this, or I, as an investor, have helped my portfolio companies with this. Is this something that Underscore is doing right now? You see other investors doing? And most importantly, if you're a founder, what's the best way to get that support from your investor? Do you send them the JD? What's the materials that they need?
Yeah, I think this is a huge area. This is where we spend a ton of our time. And I actually think it's a really important ask right now because of what's going on in the talent market. There's a lot of really great, smart talent available, unfortunately. But with all the layoffs, it is an opportunity to scoop up some excellent talent. So some of the ways that we have engaged or helped, there have been a couple different things. I mean, one, you've seen all these lists go around of people who have left companies like Wayfair or Lola or whatever it might be. And I think it's NEVCA, and there's a couple organizations that are doing a really good job of aggregating that talent. Boston Inno, I know, has done some really good work on that as well. So just seeing who's available in the market, and one of the ways you can engage your investors is, hey, do you know these people, or check their LinkedIn or whatever. So saying, hey, I've seen this person's available. I'm thinking about reaching out. Do you know them? Could you make an introduction, or do you think they're great? So part of it is sort of collecting, investors can often play a role of sort of connecting the supply and the demand, I guess. If you're on the supply side or you're on the demand side, I should say, share the JD, maybe share a couple candidates that you're thinking about. You can see if investors can send it out to their broader networks or their community, or does anybody come to mind? That is an ask that we get a lot, and that's very easy to execute on. We also often will get involved in interviewing. I actually have 3 interviews for a VP of sales candidate for one of my portfolio companies. And so, we play that role as well. Can we be another screener, another perspective on it? Another ask that we get sometimes, which I think is totally appropriate, is can you help close this candidate? Mm-hmm. So I'm a really early stage company. This person was VP of engineering at X awesome company. I got to convince them to take this risk on me. If you're an investor, you put your money behind this team and this company. So you should be able to speak authentically to why are they great and why should somebody join them. And so I know I personally am very happy to make the time to do that. I've done that a bunch with a bunch of our portfolio companies the last few weeks. Is how can you help close somebody if they're on the fence?
Love that. I have not heard that one. I mean, there's no shortage of sort of like hiring best practices and recruiting best practices, content and webinars out there. Have not heard that one a lot. Maybe an investor can help come in and close and help companies. That's fantastic.
Yeah, and also references. I think people underestimate the importance of references, and VCs know lots of people. So check LinkedIn. Say you're connected to that person who's connected to that person.
Mm-hmm.
Can you do a little sniff test because you want to well reference people.
Of course, that makes sense. Really, a few really good tactics there. Moving into, we have 2 more categories to go, and the next one is feedback on product roadmap. So this one might be in your lane pretty squarely. And we got slightly higher clicks here than introductions for hiring or new customer introductions. So looking for feedback on your product roadmap. Are there features we should add right now to retain our current clients? Maybe we're a bit earlier stage and thinking of quite a radical shift to target a whole new market segment. Or maybe we need to bring down some friction sort of from a UX standpoint. So if you are a founder, how can you approach your investors trying to get feedback on the product roadmap? Is it similar to just getting feedback on marketing and sales strategies?
I think there's a couple things that depend on that, which is, what is your investor's background and what is their strength? Like, do they have a right to an opinion on your product roadmap? And same with sales and marketing. I think it depends. One of the things I'm cautious of, and we try to be mindful and humble about as investors, is we're not functional expertise. We don't necessarily have deep functional expertise on everything. We can't. And particularly across different domains. So I think, we can ask questions and help you prioritize or think through things. And certain investors do have a background in certain things. You should certainly leverage them if that's what they do. But if that's not what they do, don't overweight their opinion because I'm always sort of like, I can give you my opinion, but what do I know? And sometimes I know stuff, sometimes I don't. So I would just be careful for over-indexing on, they must know the answers. And again, I would go back to, okay, well, what am I hearing from my customers? And I would say that both on sales and marketing, but particularly on product. And then what your investor might be able to help you think through is like, okay, what are my prioritization? And again, it's keeping existing customers, potentially expanding existing customers, and then new customers. We can talk about pivots or going after something totally different in a minute. If those are the hierarchy of priorities, then again, it's okay. What is going to reduce friction to keep my customers? What is going to reduce friction to expand? And prioritize your roadmap that way. Again, also there's sort of bang for your buck. Facebook and my product is you always sort of calculate, okay, what's the business value we're going to get out of this, and then what's the engineering and time cost. So you can do that calculus, and there's sort of specific methodologies on how to do that ranked prioritization. But lay it all out there and say, okay, what business opportunity, what customers is this going to keep if we do this? What business opportunity will this unlock with our current customers? What new business do we think this could unlock? But that's probably a little bit unproven. So how can you prove that a bit before you go spin up a whole product team or engineering cycle on it? So I think, again, you can certainly ask your investors. They can have opinions. Hopefully they'll ask you questions that get you to think. But I would ask your customers and maybe put more weight on that more so than your investors.
Good insight. And then getting to our last category, how can your current investors be helpful in securing additional funding? So maybe it's a bit of bridge funding for the time being, or maybe it's you're starting to raise your next big round or starting to think about raising your next big round. How can your current investors be helpful there? And then we've got a question from the audience that's applicable, but we'll get your quick thoughts first.
Okay, I'll do quick thoughts on fundraising. So I think the short answer is warm introductions, I think, are going to be critical right now. for the fundraising landscape. I think a lot of people are wondering what's going to happen. Are people still investing? Are they not? I think investors are still investing. I think there's a lot of dry powder in the market, but I do think the pace is going to slow down a little bit. And a lot of it's going to be around finding the right investor for your company. I think the other thing that investors are asking themselves is, do I feel comfortable making an investment in somebody I've never met in person? And I think, a lot of us, we ask that question and we're learning how to do it because that's the world we're in. So I actually just closing a deal this week with somebody I've never met in person. But it meant my process was a little bit different. And what mattered, it was warm introductions, founders that were highly referenceable with people that I know and that I trust, because as you know, early stage investing is a long-term relationship. And so, and I needed to find ways to build that rapport and get comfort with the founder, and vice versa. They should do that on me too. So if you're going out to fundraise, I would think about, okay, who do I already know? Like, who are your warm contacts from the venture world? And start with those. And then for your current investors, I think it's very fair to lean on them and say, hey, can you help me get to these people? Because a warm intro from your current investor will be much more effective than a cold intro. So I think that's a very fair ask. I think the other thing that in the fundraising landscape right now you need to be careful of or just mindful of is just listen a lot. Like, to ask investors up front, what is your process going to be? Are you guys investing right now? What is the timeline? What would you need to see to get conviction on my business? And in a world which, hey, I may not be able to get new bookings this year, what else? What are the other indicators that you would see to get conviction on this market, on this team, on this product? Because there's a lot of pieces that go into it, but just make sure you're actively asking those questions and listening so that you have the right expectations set and you can show those things. People think a lot about product market fit. And my partner, Michael Scott has a great, sort of like funder market fit. Like, you got to find the right funder for what you're doing. If you're doing something in AR and a VC firm just doesn't believe in that space, like, don't waste your time. Go find the ones who do. And I think the market piece is one that investors are certainly thinking through, because there's this whole other macro dimension now, which is, how is this whole crisis going to affect this market? And not just in the next 6 months, but in the next 3-4 years. And there's some that are obviously getting some tailwinds. So remote work, we're investors in a couple productivity, collaboration, future of work companies that are in a great spot or have a huge opportunity ahead of them. We're investors in several commerce companies that service retailers and brands. That's tricky, but I actually think there's going to be a longer term acceleration of drive to e-commerce. So how do I think about that market? So you need to find investors who are thinking about your market the way that you're thinking about it, and prioritize those, but just make sure you're listening and asking for that feedback.
Love the insight of how, because this is something that comes up on a lot of these sessions. Investors and founders can't meet in person right now. That's a big trust barrier to get over. And it sounds like what's helpful there is pulling in some additional references and getting a little more trust that way. Did I capture that right, or were there some other tactics in there?
No, I think that was well said.
Cool. Okay. And we got one question from the audience here, kind of relating to fundraising. If there are more than one investor that is a second contact from the same firm, how should a founder choose which investor from the firm to reach out to start investment conversations?
Interesting. So to make sure I understand the question, if you're connected to two investors at the same firm, which one should you pick?
That's what it's
to start the conversation.
And Isabel, if you misinterpreted that, just feel free to put it in the chat what the correct interpretation is.
I think I don't think there's one right answer, but I think if you have a warmer relationship with one, start with that. Or if you know that partners have specific domain focus, and you fall into that one, then do that. So for example, my partner Richard spends much more time on the infrastructure layer and I spend more time at top of stack. And if you know that about us, then, if you're a top stack application company, come to me. But these firms are small and they talk. I don't think it matters too much, but what you want, you're trying to get somebody's interest. And so if you have a warm relationship or if you fit into their area of interest, I would target that one first.
two more. These are the last two questions from the audience. We'll do like one sentence answer to each question because we're coming up on 12:45. Besides having great results and sharing via email updates, what has worked best in the past to get and to keep investors excited? Is it dinners? Is it F2F presentations?
Hmm.
Anything you've seen out there?
Hmm. I like the email updates. So I know you said besides that, but I actually think that's a great way just to, it's quick information receive and capture, which is very effective.
Yep.
Dinners is obviously hard right now. So I don't know if I would go with that route. Face-to-face presentation is also hard right now, but I think it's more of like what are you trying to achieve? I think showing, whether it's showing, like being able to demonstrate your results, is the most effective way, I think, to get founders excited or investors excited. And then maybe sort of quick check-in calls saying, hey, I've got some really interesting news that I thought might be relevant to you because you invest in commerce. And that's in my space. So like what are, a little bit of empathy on like, what are investors interested in and why should they be interested in what you're up to and in terms of to get their attention.
Perhaps you can help the investor.
Exactly. I never say no to that. If you can help me, then I'm interested.
Final question. What is your prediction for the future of fundraising? So maybe next 3-6 months, possibly a year.
Yeah, I think I spoke to it a little bit. I think it's very different early stage versus late stage. I think late stage growth, sort of Series B and beyond rounds will slow.
Mm-hmm.
And I think that you will see a gravitation towards a very few number of sort of hot deals or like the best of the best deals. And that's just because of volume of capital, but also what is the exit market going to look like? Multiples have been slashed by 50%. And so for the later stage investors, that matters most. I think you'll see a lot more inside rounds, both in early stage and mid stage, growth stage, where you see investors sort of putting more fuel behind who they think they should go long on. On the early stage, I think there is there's huge funds out there and a lot of them on the early stage. So there's a lot of capital still in the market. But as I said, I do think, some LPs will be crunched. And if you want to talk more about how does that cycle work? We have funders and then we fund others, and it's a whole ecosystem. So it's something that VCs are paying attention to. But that said, I do think the early stage market will continue, but I think the pace and volume of deals will change. I think valuations will change, and I think some founders are realizing that already. Some I think are slow to realize that, but because the multiples of exits are changing, the multiples for valuations are going to change. And I think we've been in such a bull market for 12 years that that's a hard thing to understand of what once was really acceptable at a, pre-product, pre-revenue at a $12 million pre. I don't know if you're going to get that anymore, which is just something that you have to manage your expectations around. And, that's okay. That doesn't mean you can't get great capital and build a great company. But I think people will need to modify those expectations a bit. But that said, you got to make sure that you're talking to investors who aren't being sharky. You still deserve good terms, and you want to find investors who are going to be good long-term partners and not just taking advantage of a short-term situation. So do your diligence on them and make sure you're sort of having a transparent, fair conversation about it. Sorry, those weren't short answers.
No, good, very, very helpful insights. I'm gonna take over the screen for one quick moment, and then we'll wrap up with some closing remarks. Sorry for the tech change, everybody. So just to give everyone an idea of things coming up, and feel free to take a screenshot of this slide because it's a bit busy. Couple of upcoming webinars from Venture Lane. On Tuesday next week, how to build trust and safety when your team returns to work. So we'll have Pratt Bennett, VP of Learning and Development at ASUP, and myself, actually, General Manager of Venture Lane, talking about how to build trust within your team and make sure that your team understands that health and safety is your top priority right now. And in building that trust, what are the sorts of questions you should ask your workspace operators so that you can provide that information to the team. And then coming up on Thursday, we have Managing PR for Your Startup While Media is Crisis-Centric. And we'll have David Gersoff Richard for that, founder and CEO of Big Fish Communications. So how to craft some sort of crisis-adjacent narratives and still find PR opportunities for your startup despite sort of the current climate. So that's what we have coming up. If you would like to stay up to date on all of the programming that we have in the next weeks and months, I just put our newsletter subscription link into the chat. Lily, thank you very much. Thank you so much for making the time. To quickly recap, it sounds like first and foremost, there are many different ways that your investors can add value, but more important for you to first go through the exercise of determining what are the top 1, 2, or 3 priorities for the team and for the business. And then there's a process of really crafting the ask and some opportunities to get a little creative, bringing investors in to help close new talent. I think is my favorite one from the session. But thank you so much. Thanks again for making the time. And to everyone tuned in, we'll see you on another webinar coming up.
Well, thank you for having me, and thanks for the great questions. And again, thanks for what you're doing for the community in this time, and bringing people together to share ideas and learn from each other and just connect. It's incredibly important and valuable. So thanks.
Of course. Thank you very much. All right. Thank you, Lily, and thank you, everybody.
Thanks, everyone. Take care.